Okay, hello everyone. Welcome to this weekly trading roadmap, where I'll be going through some of the venture and risks and the risk and money management plan that we have for the rest of the week. Now, following our weekly market wrap that we did on Friday, we saw there was some decent structures in the market, which following this little plan that we're going to go through now, we can take a look at those market structures and see how we can potentially trade them. Now, first and foremost, looking onto Monday to see what we've got. We've got the German European manufacturing PMI, services PMI as well. You can see in here. We've got the European consumer confidence, US manufacturing PMI, ECB's Villeroy, and then I've boldened the Fed's Bullard, Williams, and Harker. And if you notice, on every day of the week, I've actually boldened any Fed speakers that we're getting, because they've just kind of been bolstering the rhetoric a little bit. And in doing so, we've seen the market expectations for a Fed rate hike in June somewhat shift as well. Now, before the Fed minutes last week, and in fact coming into them with very, very little probability of a rate hike. So our rate hike expectations initially were around 5%, I believe, something very, very small. And then going into the Fed minutes, we saw that move up to 14%. Now, after the Fed minutes, now we're looking at the current market expectations is for a 26% chance of a rate hike in June. So we've now moved from 5 to 14 and from 14 to 26. We're steadily moving towards more and more probability. Now, we're nowhere near the probability that the Fed have kind of implied would be okay for them to do it without them surprising the market. And I think just looking back on in December, when they actually did their first rate hike in December 2015, we were looking at basically the historical way that Feds actually communicated and when they did actually hike rates. And it seemed as if they wouldn't actually go forward with hiking rates or cutting rates if there wasn't at least a 75% or more expectation in the market, because they don't want to surprise the market too much. They don't want to catch too many positions off guard. With the current market structure, the way it is, a lot of high frequency momentum initiating algorithms, if you get something too much of a shock, you can get these sort of small or actually rather big flash crashes in the market. So I think they really want to avoid that as much as possible. And so if they really did want to say that the market is underappreciating the probability or possibility of a rate hike in June, they can start bolstering their rhetoric even more and even more so. And just from what we saw in the Fed minutes, they did say that the market's somewhat underappreciating it. So I am paying attention to that this week. You guys should also pay attention to it too. I think they sort of took the back burner for a bit. The market got a bit complacent, but now they're back into focus, and June is just right around the corner. So pay attention to these guys, because if they really want to get the market into a position where they could potentially signal a rate hike in June, from 25, 26%, we're looking at another 50% of market expectation that needs to get built in from where we're currently standing, just based on those historical figures that we saw. So just bear that in mind for the week going forward. Now, medium relevance, I've actually put medium relevance just across the board, just to make it quite easy, because it seems more or less the venture and risks are kind of evenly spread out across the week. So I've put 20% risk allocation for every single day. Moving over to Tuesday, we've got the German GDP and ZOO survey. I don't bolden this anymore. I don't look at this as much because it just doesn't move the market as much as it used to. 2-3 years ago, when I was still quite new on the trading floor, this was a great figure to trade, but no longer one to be taking a look at. U.S. new home sales, ECB's Pret and Liikanen also speaking on Tuesday. Wednesday, we've got the German IFO business. Again, just the same as the ZOO. Similar sort of situation. Used to be good, not as good now, but keep an eye on it. We've got the U.S. house prices and services PMI, ECB's Constancio, and then again these Fed speakers, Fed's Harker, Kashgari, and Kaplan. Moving over to Thursday, we've got the UK GDP, US home sales, the Fed's Bullard and Powell, and then Friday, US PCE, which is relatively important, GDP, University of Michigan consumer confidence, and the Fed's Yellen speaking. So that is pretty much what we've got on the horizon this week. Next week, obviously, we'll go through that next week, but 30th, 31st, we're going to have month ends as well, but we'll talk about that next week. But do expect potentially coming into month ends, we do potentially start to get flows coming into month ends a week earlier. So that could apply in the bond space and maybe even the equity space if they need to rebalance anything. But we'll take a look at the structures now and see how that's panning out. So just based on what we saw last week in the Bund, very simply, the market sort of came off. We had a bit of long liquidation in the market. We came down, as we were talking about, if we would hold an offer below this level in here, potentially would come and test into this cave area, which we did. We didn't quite get down to that VPOC, which we spoke about, but we did come down to that high volume region, as you can see, tested that, and I'm actually left now a buying tail. Now, that's quite important for us this week. We have a buying tail last week, so we've had a bit of a rejection. The market tried to test below that weekly low and actually closed above it. So you can see the close is above that weekly low. And now this week, we've kind of opened up around where we closed the previous week. We've left already a small buying tail in here, and we've tried to make our way higher. Now, I'm a bit surprised that these 163.89s, which is a value area cross, so we've got a value area low here and a value area high in here. Basically the same level. I'm a little bit surprised, to be honest with you, that level, if you see we toggle that level there, is not really acting as any sort of important pivot. Now oftentimes what you find is when you get these kind of levels, they act as a very, very strong pivot and an area in which you can say that's your line in the sand. If we're above there, the market's seeking value higher. If we're below there, it's still within the previous weekly value area, and you should take it as such and play it as such. But for the time being, it seems as if we're rotating around it. Now, it doesn't go to say that during the week it might not transform into that pivot that we usually see. Sometimes the market sort of pivots around an area, then it, for some reason, uses it later on. But I'm still going to be looking at this area, 163.89s. Right now, it's not really acting as such. But if we do close above here, if we get a close above here, and we start using this area as value, or building value above the previous weekly value area, and start using this area as support, then obviously I'm looking for a test of these 164.28s, which is a weekly close and a weekly high. So very key little area in there. Also, we've got the 30s in here, also a weekly value area high. This region, as you can see in here, pretty critical for the market. I'd suspect possibly on first touch we might get a bit of an offer, but in any case, what we have to remember here, guys, is that up in these areas, as we're going to show now, these 164.43s is really that really important area, that level that provided us with the resistance in here. And when we came down through here, we used it as resistance. Here we poked through it, came up to these 164.49s, but we tested them again. We came back, tested it, and then used that as resistance. So I'm looking obviously at these levels to see whether we might get a move or some sort of reaction off of it. However, what we do have to remember is, guys, that we've come up into this area now twice, rejected it, we've come back lower, and now we've failed to actually continue to the downside. So for those market participants that have been shorting in here, shorting all in here, above these areas, they're probably going to look to stop out quite aggressively. They probably have their stops here, and the more, I guess, interesting area is above these highs in here. So just beware that above these highs, if we start getting good volume, good aggressive buying at market. So if the delta, if you're looking at the delta on the day, starts getting really, really positive as we're breaking these highs, and there's good volume, I wouldn't stand in the way of that personally. I think there could be some decent moves. Now, obviously, that would probably coincide more so if we get a move to the downside in the equities, maybe some risk off moves that would kind of play in nicely with that. I know I'm kind of earmarking you guys with a little bit of a bullish bias, but I'm just talking basically on what I can see in terms of the structure. Now, if we can't hold a bit above these areas, and we actually, for me, our line in the sand for this week, I could feel as if the structure, this area for me is quite important. So I know it's a pretty big area. It's not like a specific level. If there's one level I could probably point out, I'd like this VPOC to hold if I'm bullish. So these 163.55s, very important level for me. We've obviously got this close just above here. This low, weekly low here, 163.50s. If you move across, actually, 163.50s was a previous value area high, as you can see in here. So previous value area high, another VPOC in here, another VPOC in there. So that area looks like a pretty significant area, just if we get back down to it. Sorry. So just pay attention to 163.50s, but I think the important level for me is these 55s, first touch. If we manage to get through that, hold an offer and start building value below that, that's where I'm potentially looking. Really now I would be looking for that VPOC to definitely trade out, and probably even lower than that. So just pay attention to this structure, see how this is playing out. Obviously, once that happens, that's giving up that buying tail that we have on this week and the next week, which is obviously going to change the structure quite a lot. It's also going to mean we're going to post, if we post this a lower swing low on the weeklies, it really opens us up for some bigger downside moves. So pay attention to obviously this area here. This VPOC 62.88 is at 50% of the week, and then we've got a value area low that comes in at 162.60. So overall, some decent structure in the Bund, and I definitely keep an eye out to see whether we can hold and build value in here. If we build this area out, the more we're trading just below that double top, the more I'm thinking that cup and handle that we spoke about last week might actually come to fruition. I know I said below these lows here, I wouldn't really be looking at that, but it seems as if we've come down, sort of absorbed the selling, and now we're looking to make another move back up. So just pay attention to how this plays out, and it could obviously be very interesting. The nicest structure, I'd say, out of the two is definitely the Euro Stoxx 50. The Euro Stoxx 50 now has a double inside week. Not one to be, looked over. I would definitely be paying attention to this because we still haven't broken it yet. You could see very clearly this is an area of convergence. There's been a lot of energy being built in here, and how we break this area is going to be very, very important. I personally feel as if a break to the downside would be better. It feels that way. The price action feels that way. It's been struggling to hold the bid. But having said that, we could get scenarios in which we do get a break to the upside. Now, if we get a break to the upside, we break this kind of convergence area to the upside, keep an eye on how we act when we break. So I would expect if we break this double inside week, we're going to get some fearsome buying. And it could take us all the way up here. But if it's not really met by fearsome buying, and I'm putting this scenario in your head just in case. So let's say we break, we get some decent flow for 15, 20, 30 ticks, and then the market starts shifting lower and struggles to actually build structure to the upside, and we start falling under our own weight again, like we've been doing the last couple of weeks. If we get back below these areas, 66s, inside week high, and another inside week high at 29.72s, if we get back below this area and hold this area, that is for me going to be such a high conviction short, in my opinion. Just because I feel as if the price action is kind of playing that way, has been playing that way so far. That's one scenario, obviously. In another scenario, we could obviously just break higher, hold, and then continue building value at higher prices. That's obviously another scenario. I've got scenario 1, scenario 2 here, and there's obviously the scenarios to the downside. To the downside, I wouldn't look so much for a false break as to the upside. That's just based on intuition, but let's see how that plays out. If we do breach these 28.96, as you could see is a VPOC in here, and take that area out, I would definitely be looking for continuation move beneath that inside week low at 28.87 down to these 28.73s. Once we take out these 28.73s and hold that area, I'm more looking for a continuation. I wouldn't really be looking for the fade unless, we made our way back above this VPOC, which in my personal opinion, it feels as if there's more weight in these profiles to the downside. You can see there's more weight, more of a VPOC. I mean, the VPOC's not that much bigger than the rest of it, but you can see overall there's been a bit of more weight to the downside as opposed to the upside. So if we break to the downside, I feel as if we've got to do more work to get back above it. Whereas to the upside, if we break this upside area, there's not much structure in here for it to actually hold. And I hope you understand this concept, guys. This area in here for me, and this is getting a little bit messy, but again, this is our convergence pattern. A lot of weight in here, not much weight in here. If we break out above here and get back below, there's not a lot of work to get through this area. There's not a lot of volume and a lot of work to be done to get through this area. As opposed, if we break down here, come back above, or try to get back above, there's a lot of volume in here. There's quite a big structure to get through. Having said that, if we do get through, then yeah, okay, we will get that rotation, in my opinion, to the upside, but I'm not necessarily waiting for that to happen. So if we do get that play through those 2887s and through those 2873s, do watch out, because then we're looking like we could set up for a pretty hectic move to the downside. I just want to pull across the cash equity chart. So the stocks cash equity chart, so you see what I'm actually looking at here. You can see, again, just based on what we've been doing, we've had this sort of topping pattern, our neckline for that topping pattern, which we've struggled to get above. Now this is the critical point right now, because we've got this bit of a trend line now right here. We've had this convergence over the last few weeks. This is our mother candle. Now, for me, obviously, if we break this, the important area in the cash to the downside, if we break these 2860s, that now means we've taken out a pretty big swing low. In which case, if we take out that big swing low, that could set us up for a bit of a downtrending market again, as opposed to what we've seen recently. Obviously, we've seen this price action since 2015. We've been making sort of lower lows. We've just kind of broken that pattern a bit, made a higher high, have a bit of a higher low in here, so we've kind of converged. But once we take this out, we're sort of now looking for a move back down to these 2672s, and really below this level, which you can see, which is a very important level. Below that area, the next real area is here, these 2789s, and then down to these 2672s. So there is scope for that move to the downside. Now, again, I might be painting a bit of a bearish picture, but it doesn't necessarily have to play out that way. If it doesn't, and we get that sort of sudden move to the upside, this can obviously play out bullishly. But do remember, this is our line in the sand. That key level, you can see, he's had a swing low in there and a very important swing high in there. 31.37 in the cash. Above that level, then you could turn a little bit short, like a lot more short-term bullish, if anything. So definitely one that I'm taking, keeping a very, very close eye on in the stocks 50. Now, if we just take a quick look over at some of the FX markets, see how those are playing out. Following up from last week, the dollar, as we said, so this is our dollar chart. Dollar, as we said, we've actually got a bit of a daily chart in here. Let me just, I'll just leave it like that, actually. We've been talking about this sort of falling wedge pattern that we've seen in the dollar. We had that false break to the downside. It came outside of that range, came right back inside, tested the other side, broke it. This is our break. We retested that falling wedge and now rallied. Now we've taken out that pretty key swing high, and now we've made a higher swing high. With a little bit of a flag in here, you can see we left an inside day, and today we kind of false broke that to the downside. A break of that higher end, and I think there's going to be some decent continuation to the upside of the dollar. So following that, if we do get that continuation in the dollar, just see how that plays out across the majors. Obviously, your key area here still is these 95.19s. You got that inside day low just below there, and that swing area below that area. Then yeah, okay, we might get a bit of a consolidation or a long liquidation in the dollar. but I still feel as if there's more scope to the upside for this. What does that mean for others? Obviously, if we take a look at the Euro USD, you could see very similar transposition sort of chart with the dollar. We've had that false break to the upside, come back inside, taking out those key swing lows. The really key area now, I think, is this trend line, which we've been holding for quite a bit. You know, we've held it in here, we held it down in here as well before the move up, and we've held it again last week. Below that, if we break down below this trend line, I think that's going to give us the scope for potentially a pretty big move back down into this range. So that's kind of how we're looking at in the euro. If we hold that area, you know, still keep an eye out for these little pivot areas above at 112.84s, and there's not really anything until we get back up into this area, which is, for me, I think going to be a really good risk-reward type area to play. If we do make our way back in here for whatever reason, it's a massive tail guarding you. I would probably, you know, look to play this around here for short. With really, if you can afford to take on that longer-term position, your stop above here, your entry around here with the tail behind you, and you're looking for that rotation back inside the range. But that's kind of how I see the Euro USD structure and how it could potentially play out. Last week we had a bit of a surprise move in the cable. We had that Epson Muri poll, which came out, and we basically saw that the Bremain camp was a lot bigger than we expected. And actually, so a really big rally up. We tested these 146.68s, but we actually closed back below that inside month high at 145.14s, which is interesting. And it seemed as if this week we're paring back a little bit so far. But the fact that we've left another bit of a tail in there, not quite sure what that means. It looks as if, you know, we've had this sort of inverse head and shoulders in here, which we broke. We came back and tested that neckline, it seems, and held. I'm very skeptical now about the structure. I feel short term, I can't really be bullish or bearish. It's really quite neutral. Medium term, I'd say, is quite neutral. Longer term feels bearish more than anything. And I can't really lose that longer term sort of bias unless we get above these swing highs. So until then, still kind of longer term bearish, but short and medium term, I'm waiting to see how this plays out. Obviously, the fact that we're still holding above that neckline is speaking a little bit. The fact that we can't hold below that might be a sign that there could be potentially some buyers in this market trying to hold it up. But until such time as we get a move either above this high here that we posted last week at 146.61 or the low at 143.30, I really can't, you know, have any sort of major bias one way or another in this currency pair. Great. Just moving over just to a few of the commodities, just really take a quick look at gold. You can see we're still kind of playing out in that trend channel, as you can see in here. We'll potentially have scope to test the bottom end of that. So this week, if we do test the bottom end of that, pay attention to this sort of area. I know it's not perfect, but just pay attention to see if we've got like larger areas of absorption. If we get an area where the market starts trying to absorb, hold, and build a bit of a base. So in terms of a profile structure, if we get a day something like this, where it absorbs and then eventually makes a move to the upside, and we use this kind of structural area as support before launching higher, I'd pay attention to that. But obviously, it would be best if these profiles have a little bit of a buying tail. But overall, if you can see a big buyer in the market around these areas, pay attention to it, because we still have this trend channel. Up until we get rid of these lows in here, I still feel this is good for a trend move higher in the medium term. If we take a look over at oil, just to wrap it up, you could see last week we had a bit of a euphoric little move up into these areas. We came past that target area that we've been talking about, 47.71s, which was the upper end of this kind of structural area in here. We came through that, but tried to test these 49.33s, didn't quite get there. For me, the structure still feels bullish, but the fact that we've been rallying from 26 bucks all the way up to almost 50 bucks without a decent move back down. I mean, this was our probably best pullback, which came back, just ahead of these 3482s. But, I feel as if we find a bit of an offer in here, I wouldn't be surprised if we kind of dropped back inside this kind of value area before and just ranged in here for a while. If we don't, and we do take out this swing area in here, then honestly, looking at this, there's really nothing much in here. In fact, if we get above there and we start holding that area as support, we could really have a launch pad. But I don't think that's my number one scenario. Right now, I feel as if we'll probably do potentially a little bit of a pullback in oil after this pretty decent run we've had. So just pay attention to that. Understand how that could potentially play out in the week ahead. All right, guys, that's pretty much what I'm going to go through this week for you guys in the venture and risks and the money management plan that we set out. We looked at the market structures. We saw that the equity, just to wrap up, the equities are looking prime potentially for some big moves. Up or down doesn't matter. Our job isn't to really pick a direction. I know sometimes I give maybe a little bit of a bias what I'm looking at in the longer term, but that doesn't really matter. My longer term views don't have any sort of bearing on how I trade intraday. My intraday plans are, level to level, scalping on the order book. I just like to keep the bigger picture in mind, just so I know potentially what could happen. I have a scenario in my mind, so I'm not caught off guard or caught with my pants down in case something does actually happen that I built into my plan at the beginning of the week. That's basically what I wanted to go through this week. Thank you guys very much for listening in. Good luck for the rest of the week, and have a happy trading week. Bye-bye for now.